Alright guys, welcome back to this YouTube channel. We shall continue on building our model. We are now going to be building our cash flow statement. If this is your first time of subscribing to our YouTube channel, please make sure you go through the previous videos so that you can catch up with what we are doing here. And if you're a returning subscriber, I really appreciate you for staying, and please make sure you comment and like and subscribe as well. Share your knowledge, share your experience, tell us if this is adding value or not. In the next section, or in this section, we're going to be building our cash flow statement. All right, I have actually gone ahead to pre-format this cash flow statement before I started recording this section. And the first thing we are going to see here, we are seeing our earning before tax. Now in some cases, in some cash flow statement, you will have to, if you choose to begin with your net profit, then there will not be need to for the tax. I think in this case I will go with the I will go with the net earnings for the year. I think I will go with this. So that means I will do away with the tax. All right, I will do away with the tax here. I'll do away with the tax here, so I won't be having that. So but you can choose to go with that, but I choose to do with this one right now. If you look at the one we are working with, I actually started with the earning before tax, so that is it. Started with that. And also there are changes I will also make here, but let's go ahead and see. So here, our earning before net earnings for the year is going to be equals to what we have here. There is no need of divisor here because it has already been divided. Now we have adjustment for non-cash item. One of our adjustment for non-cash item, we are going to add it back. So we are going to add depreciation back because it's already negative. We want to remove the negative now. So if you put equals to, it's advisable to also add equals to, so that the depreciation can be, the bracket or the negative sign can be removed. So once you do that, you just fill it in, clicking and dragging to the right. So when you do that, we have the inventory. Now this is the part, changes in working capital. Now let me show you something quickly. Remember the changes in working capital we did in our input or in our calculation section when we are calculating working capital. There is a changes in working capital we computed earlier, which is this. Now this is our changes in working capital. In operating working capital, you can just click on it and integrate it. Now I want to show you something, that at the end of everything, if you choose to go by recalculating this like this, you will still arrive at the same value. So that is why I decided to go ahead and do that before I come here. So what you are going to do here now is you are going to go to your balance sheet, that is your statement of financial position, and say, okay, what is the difference between what you have in the current year and what you have in the previous year? So that's what you're going to be checking. So you're going to say, okay, in the previous year, our inventory is equals to this minus this, right? This is what we have. I want to show you, I'm not going to use it. I will either use it or I'll use the one I've already computed earlier on, right? I'll go ahead and say, okay, what is our, okay, because there is already a consistency there. These are arranged in order. I will just click and drag down. You can see we have the same thing, right? Now when it comes to your liability sections, it's a different ball game altogether. What you're going to do is going to be your current minus your previous. So you're going to say your current trade payables minus your previous, right? Minus your previous. So this is what you have. You now click and drag because there's already a consistency. Now see what happened. If you choose to do it this way, it is fine, it is okay. But I need a financial statement that is concise. I don't need a financial statement that is bulky, presenting a lot of information. If you want to know how we get this information, actually, you can always refer back to the calculations. And that is why in every financial statement you always have what is called the notes to account. Those notes to accounts are the ones that will explain how they arrive at each figure presented in the financial statement. So that is what I did here in this figure. I choose to do this like this, or I choose to do it like this. It's still the same thing. Now if you sum all of this together, you are still arriving at 67.63, which is what we have here already. So if I choose to leave it with this, it's okay. If I choose not to leave it with this, or it's okay. So but let me just go ahead and remove this, since I've been able to explain myself on why I have to use that, or why I did that. It's still going to give you the same result. So you just sum this, sum, and also this. When you sum, you have your net cash flow from operating activities. Net cash flow from operating activities. So that is what you are going to have. Net cash flow from operating activity. Then you can now click this, select the whole of this, and drag further. So you have something of this nature. Now your PPE. Now in this in cash flow statement, investing activities takes out money. So what we are going to use here is not the net PPE. What we are going to use here is the original value of the PPE. So what is the original value of the PPE? When you come to your calculations, the business asset. What is the original value of the business asset? The original value, because the original value is what we are going to use. So the original value, where is our capex? Now this is the original value, right? This we now divide it by the divisor. So we have this. So because we only bought things in the first year, in the second year we don't have anything, right? We don't have anything. So the new shares we issue, that you go to your calc as well. What is your new shares? The shares you issued out, we have only issued out shares in the first year. In the first year we have this. Okay, let's confirm something first, please. Oh, my head is already charging. Where is our investing activities? Okay, investing activities. You can see this is where our problem could have come. We have okay. So our new capex, new purchase, you have this divided by the divisor. Divided by the divisor, we have this. So you can click and drag this further. Then here, divided by the divisor, that's the equity. Click and drag further. You can see we don't have anything. Then our loan. How much loan did we obtain? Our loan is going to be, our new loan is going to be this, divided by the divisor. Fill it in. Now these are things that brings in money, right? Now what are the things that takes out money? The things that takes out money from us are the dividends, because we are paying out, right? Dividends, so it's going to be in negative. So dividends, we have this. Where is our dividend equity schedule? We have our dividend, it's going to be this, divided by the divisor. Then we have our principal repayment. Our principal repayment is going to also be under the loan, this, divided by the divisor. So you can see how we are progressing. Then you now sum it up. We have your total cash flow from investing activity. So you can just click this, fill it in to the right. So we have this. Right. So now the same thing applies here. What is the beginning balance is always the ending balance of the previous year, and our cash for the period is going to be the summation of the net cash flow from operating activities, net cash flow from investing activities, and net cash flow from financing activities. So net cash flow from operating activities is this, plus net cash flow from investing activities, this, plus net cash flow from financing activities equals to this. So when you add them up, you now sum. You have this as your, you now have this as, you have this now as your ending balance. You click and fill it in. So once you do that, you come back to your financial statement. Come back to your financial statement and you now link it. You now link the closing balance and see, does it agree? We have problem. So we are having problem of 40, that means 64,000. So we are going to find out where this problem is. So in the next section we must find out where this problem, because in as much as the first one did not balance, the others will never balance. So let's go ahead and see, fill this in. You can see the others will never balance in as much as the first one did not balance, so the others will never. So let's go ahead and see where and locate where the problem is. All right guys, like I say, sorry for the little delay, but like I told you, this account has not balanced and I have to go through the accounts again to check where the error is coming from. Now if you look at the difference here, it's 64, right? The difference here is 64. That means, look at this place, it's multiplying this by 2. What it means is that this is an outflow of cash, but we treated it as an inflow of cash. So that is why we are having that 64, because instead of treating it as a negative, it's now multiplying it. Remember that all these things are linked. It's now multiplying by 2. So that means what we are going to do is to put this in a negative sign. Once you put it negative, put the negative sign on it, click and drag and correct it, then we can come back to our financial statement. There's a financial position. You can see that automatically everything has been updated and everything is correct. Now our model says everything is true. That means it's okay. So what we do in this instance, for the sake of anybody who is a financial analyst or is a financial expert, once it comes to the model, you now look at it. What is our model check says? What does it check? The check says. So we can say our model check. You say okay. Can say okay here. Now when you say okay, that means the financial model has checked out and everything is okay. So that is just it. Anytime you are preparing a model and the model did not balance, you have to go back again and start looking at it. Look at the model critically and look at where you are omitting something, because if your assumptions and your linking are correct, your model should automatically balance, right? So that is what we have here in the model. And if you see here, our financial statement says everything is true. So you can now use your if statement. You can now say if statement. If this equals to this, what? Instead you say okay. If negative, if error, if not, if error, let it say error, right? Let it say error. So you close it, so you can see why. We selected the wrong thing now. So this is this and this, right? So if it's okay, you say okay. You can see that it has said okay. So our model check is okay. So we can put this in our reference and we can say this, centralize this. I usually like to centralize this, so let this be in the center. So this is our model check, and the model has completely balanced. So we are done with our financial model, the true statement financial model. We started with the guide. To financial statement. After that, we look at the assumptions. We imputed our assumptions. Then we start the calculation based on our assumptions. Then we now linked our assumptions to our calculations of the income statement. right? Our calculation to the income statement, the financial statement, and the cash flow statement. These are the three most important financial statement you must have, every business must have. Now in the next section, what we're going to be doing now, we're going to be looking at scenario analysis. What we mean by scenario analysis is, what if there are changes, economic changes or economic circumstances, what is their improvement, or if there are worst cases. We're going to now see how to do that, how to value the business in that regard. So if you have not yet subscribed and you are liking what you're already seeing, please, for more to come, like and subscribe, support us, share this channel, comment your concerns, and we're going to do videos and give you a shout out videos that will tackle your need. And see you in the next video. Thank you very much.